as we like to call it right now. Chakri Lokapriya, Managing Director at TCG Asset Management, joins us on the show. Chakri, this is unraveling fast. March 13 was the first lower circuit. We recovered from there. Doesn't seem like we'll recover from this one because it looks like we'll start off another, at almost the same levels. So what would your thoughts be on this?
Good morning. The pace at which things are unraveling, I think the market clearly is trying to figure out a bottom, which is still a distance away. If you just look back at history and if you look at the global financial crisis, the markets had assumed an earnings cut well in excess of 25%. If you do a rough math, basically current earnings cut, because when this whole corona thing started, was roughly about 15-20%. Now, if you just go by strict math, that implies that there is further downside to the market from current levels too. Now, as things unravel and various production of companies like OEMs have suspended production, hotels, etc., the whole services industry has come to a grinding halt. So there is going to be significant amount of income erosion, which the market is struggling to price in. And against, in those circumstances, markets usually assume the worst and go lower.
Chakri, good morning. The sentiment is totally fearful at this point. So maybe even the early signs of a bounce back or a recovery may not be bought into completely. Do you feel then that could extend this recovery to a slightly longer period of time as and when we form that base?
I think, we would have a number of trading bounces up and down for the next coming several sessions. And each of them should not be perceived as, the market has found a bottom or the market is trying to move on its way up. Because, the commentary that will come out from various sectors is likely going to be negative. When it's negative, so there's going to be a further readjustment to the new reality. Against that backdrop, I think the pure retail buyers are better off sitting by the sidelines. Institutional funds will nibble in readjusting their portfolios. And traders, it depends upon whether they're taking a positional call or a day-to-day trading. So I think retail investors, in my opinion, should stay away for quite a bit longer.
All right. What's your own strategy, Chakri? What are you adopting right now?
We have raised a fairly decent level of cash. We are north of 25% plus in cash. And we do not see it being deployed anytime in the soon. What we're looking for is some amount of a stability of the virus outbreak numbers-wise, outside India. That is important, not within India. Now, that will be the first indication. And second is, concrete government proposals, policy actions are important at this point in time. For instance, BS4 vehicles, if March 31st is the deadline after which registration is not possible, we need to have an announcement from the government, from the courts, that's saying that, yes, we are going to extend it by 3 months, 6 months, whatever that is. I think those are the tangible steps that we will look for before we deploy funds.
So far, we've seen a lot of push behind a monetary stimulus. Do you feel that, and from the rest of the globe is what I'm saying, India still has refrained from taking any kind of interest rates cuts at this point at least, but the RBI has indicated that they're watching the situation and they'll take an action as and when required. But is monetary stimulus enough, or there has to be something that comes in the form of a fiscal package?
If we just look back, look at other countries currently what they're doing. Now, U.S. has announced tax cuts for its employees. Of course, it's a policy decision that's unfolding. A $1 trillion rescue package. South Korea has provided rent subsidies and tax breaks. Japan has provided low-cost loans for companies. A number of different countries have taken actual steps. And I think what the Indian market needs is such concrete actions from the various government bodies for specific industries. And this is more so important, and they should be policy actions which address the immediate need of a freeze in the economy, a freeze not of liquidity, a freeze of movement of goods. People are not going to a bike showroom to buy a bike today. People are not going to a restaurant or a hotel. So what do you do to address that situation? So those are the policy actions which are needed rather than long-term policy actions.
Chakri, just talk a little bit more about the defensive space. At such times, where do you hide? Do you hide in pharma? Do you hide in IT?
I think that's a relative call in terms of the falls are clearly have been across board and will continue to be across board. In a relative world, IT and pharma, I think the earnings are far more protected versus the other sectors. And yes, those clearly would be sectors. And traditionally, consumer staples maybe to an extent, but again, the valuations are fairly rich over there. So these are all relative trades. And also, mind you, India is majority, a 70% plus services-dominated economy. So when services come to, there are curbs put on services, and that impacts the whole economy.
Yeah, I think that's a clear and present danger, and gauging the economic impact might just be a very difficult thing right now. IPCA and Cadila are probably the two names which are in the green, but aside of that, it's futile to talk about the green on the Nifty 200 as well. All the remaining 198 stocks are either trading in the red or trading absolutely flat. That tells you volumes about the kind of pain here. Chakri, just wondering, would you, I'm guessing the answer right now is to stay away, but would consumption be the first port of call as and when this turns around, or is it even futile to talk about turning around right now because we frankly don't know how long this will last?
Yes, consumption, both, consumer discretionary, because consumption as in consumer staples haven't fallen as much as the overall market. So consumer discretionary, clearly yes, as and when this settles down. And all indications are that, the Western markets, Western real economies are talking about a 2 to 3 month time frame before things stabilize. So if that's any indication to go by, looks like that time frame one needs to wait before, one can go back into the market.
Yeah, it does. Okay, Chakri, just one last question from mine. This massive fall that we're seeing in the financials, we're not getting into the merits of whether it's warranted or no. Let's assume everything is warranted right now. Does it bake in the worst? The last time, I know the book values get adjusted downwards for sure and NPAs pick up, but the last time I saw Bajaj Finance trade at, 3 times price to book 1 year forward was many eons ago.
Yes, indeed. I think, the valuations for the whole financial services sector has come down quite dramatically just in the last 1 month or so. So from a pure valuation perspective, are they attractive? The answer is clearly yes. But I guess now what the market is waiting to reprice is what will be the loan rates, what will be the growth rates for the next couple of years post-Corona once the dust settles down. And a lot of what the growth rate will be dependent partly on company actions and more so on what policy measures the government comes up with in the coming weeks and days.
All right, and we are, we've heard that Prime Minister Modi is going to be sitting down with industry bodies to figure out the kind of impact that they will be seeing due to coronavirus. Chakri, thanks very much for being with us and sharing your thoughts with us on